All right, what is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about some news in Europe. All right, we've also got to talk about the open interest. We'll break that down on the futures. LNG export capacity is looking like it's going to double into 2027. And then there's a little bit of news in Israel. We'll break all of that down as well as give a detailed technical analysis on the weekly time frame. You can see we actually broke out of that triangle pattern, retested it very cleanly, and we're starting to push up a little bit higher. We'll talk about our 4-hour wave count is still intact at the moment here, and then we'll zoom back out again and take a look at the monthly time frame so you guys can get a clearer picture of basically the big picture, right? And the overall landscape. All right, we'll talk about Boyle, break down the daily chart for Boyle, break down the daily chart for Cold and for UNG. So be sure to smash the like button, subscribe to the channel if you guys are new. But as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out free trade ideas as well as free valuable content. I try to sprinkle in 1 to 2 free trade ideas for you guys every single week, and this is what they'll look like, highlighting the conditions, showing the chart and the setup that we're looking at. We had a trade on home builders, okay, over 2 months ago, highlighting some of the bearish patterns. Right, you can see that that sector fell down 18.5%. This was another one here on Stanley Black & Decker, a rising wedge, highlighting, where we think the price can come down to. And again, you can see that that trade played out very nicely. So if you're fans of free, valuable content and free trade ideas and you want to get those straight to your inbox, go ahead and sign up for that newsletter using the link in the description below. If you want access to all of the different trade ideas and the different stocks and commodities, crypto, everything that I'm looking at, you can join the Investment Intelligence Discord. It's just a couple bucks a week, less than a cup of coffee. Now, we'll get into it. And Europe taps record high natural gas storage as the temperatures drop. Okay. And basically this week, as heating demand rose. Okay. So heating demand is rising due to the weather turning colder. And so that's going to be a little bit bullish, right, for natural gas, right? Is basically that colder winter, you're going to need, essentially more natural gas to heat things up, right? If we take a look at the futures, open interest in the natural gas futures markets increased once again on Friday, this time by around 15.6 thousand contracts. And so this is a nice little chart here visualizing it for you. You have the natural gas itself here in red, and then you have the open interest here in blue, and you can see that large uptick that we've had, and we've had a strong uptrend in the natural gas open interest futures, even though the price has been declining here a little bit. But it has been on a nice uptrend, right? Creating higher highs and higher lows here. We'll see if we can continue that uptrend. Now, LNG export capacity from North America is likely to more than double throughout 2027. All right. And so this has a lot of people bullish on the LNG sector as a whole. But, if you're looking to capitalize off of this, right, something like Boyle, honestly, is not the thing that you want to hold, right? You don't want to buy Boyle right now and look to hold it through 2027. There's a few reasons for that. I break it down. I have a really good video going over the myths surrounding the decay factor when it comes to UNG and Boyle. Okay, it's a really great informational video. I definitely recommend watching that. You can just type in ZachlyTrades, Boyle decay, right? And it's definitely not something that you want to be holding for years and years and years, right? It's much more of a trading instrument. So do keep that in mind. There's plenty of other actually natural gas stocks, okay, that aren't commodity ETFs. That you guys can look at as possible investment opportunities if you are, interested in that, right? Now, natural gas production has resumed at Israel's Tamar field. The local media is reporting a month after it was suspended in the wake of the Hamas attacks on southern Israel. The government ordered production to be shut down due to its proximity to the battlefield. So as a result, both local supply and exports to Egypt suffered a slump. All right. And hopes for diversification of LNG supplies for Europe dimmed. Egypt was viewed as an important new source of LNG. The Tamar field is one of 2 massive offshore gas fields that put Israel on the global gas map when they were discovered. The field last year produced 10.25 billion cubic metrics, up by 18% in 2021. It's operated by Chevron, which also operates the other major gas field in the country, Leviathan. So that was just a quick news recap on some of the news that's come out over this weekend and this morning. If we take a look at our weekly time frame, we did get a nice breakout here. Okay, and you can see we came back and retested, right? So the level that we've been looking at has been 2.988, and let's just round that up to $3. Okay, $3, as I mentioned, has been that really important psychological level, right? That's that key level. There's a lot of investors, traders, even that stepped into the natural gas trade once it cracked that $3 threshold, right? And so a lot of those traders are going to be exiting the natural gas trade if natural gas does not hold that $3 level. So it's a very key level, it's a very important psychological level. And I've mentioned before that, essentially we had this area of old support, right? Old demand. Okay, so we have old demand here. You can see we kind of consolidate here, breakout, retest that level, push higher. Then we come back down, retest it again, push higher. And we never really tested it as resistance, right? Over here, when we went to test it as support, you can see we just completely blew through it, right? And now I've been saying since natural gas was in this triangle pattern that, hey, if we break out of this triangle pattern, it's going to make a lot of sense for natural gas to go back and retest that 350 to $4 range. And sure enough, we did do that. You can see here on the weekly chart, we were not able to close up in that range. So there's still a lot of sell, a lot of supply in here, and that's evident by, the structure of the candlesticks, right? As soon as we come up to these levels, you can see we only are able to form wicks. So be cautious around that 350 to $4, price area on natural gas. There is still lots of supply there. There's also our 200 period moving average on the weekly time frame in this range. So there is going to be lots of resistance up in this area, and that's something you want to be prepared for. And have some type of game plan for it. If we do continue pushing up and getting closer to that $4 range, just know that there is going to be lots of resistance there. And we would look for a little bit of consolidation to absorb that overhead supply, right? And absorb some of those sell orders, but not fall down below, right? We want to consolidate in this area. And ultimately, if you're bullish, you would look for it to, absorb those sell orders and create a demand imbalance where there's basically a larger amount of buy orders than there are sell orders pushing price up out of that range. So if we zoom in a little bit more to the 4-hour time frame, this is our MCX futures chart. So the numbers are going to be a little bit different, but the structure overall is still going to be the same. We had a wave 1 up, 2 down, and wave 3 is typically your most impulsive wave, right? And so we got that wave 3 here. And we talked about how there was a really big gap down to fill on the futures chart, and you needed to be cautious of that. But even that, if we did end up coming and filling that gap, it still would be a healthy retracement in the fibs there to potentially continue going higher. And you can see we actually came back and retested the 1.0 extension here, did a good job of pushing higher. We pulled back again, and ultimately the wave 5 targets right here are going to be around 340.2 on the MCX futures. We'll see if they can really extend that high. There is going to be a lot of supply over here in that zone, but we have done a really good job of, this former supply zone right here, right? You notice how we came up into this area and we started consolidating, absorbing those sell orders, created that demand imbalance, right? And then we pushed back down lower, retested the zone, right? So we came up, consolidated, broke out, retested, and then now we're pushing back up higher. Okay, we're creating these higher highs, we're creating these higher lows here at the moment. And we want to see ultimately, can we push and create a new higher high right here that would take us into the next overhead supply zone. This is our 200 period moving average on the 4-hour chart. And you can see that even when natural gas was pulling back last week, we did a good job of holding that 200 moving average. And now we're starting to push a little bit higher. We'll look to see if we can get some continued strength. This is let me go right here. This is our monthly time frame. Okay, so this is that next overhead supply zone that we're looking at our wave 5. You can see we haven't tested this level in a very long time, and so it's going to be tough to get up here, right? I mean, there is going to be a lot of challenges to get up here. We really need to see demand. We really need to see buyers step in. But, when you take a look, right, we had this overall demand zone, from the past that we can see each time we came down into this level, price ended up going up higher, right? Whether it wicked down and touched it or whether it consolidated in that area, each time it did so. And in 2023, we got the same thing, right? We touched and dipped down into that area multiple times. But you can see on this monthly chart here, Each time we did so, we only wicked down there and we weren't closing down there. Demand was strong, pushing price up out of this zone each time we came into that area. And then we had that overhead supply, and you can see we battled that overhead supply zone for the entire year, right? We're testing it here in the beginning of the year, testing it here, testing it here, here, here. And this is what I mean by, when we go back to that weekly chart, ultimately you want to see us consolidate before we can get that breakout, right? So that means that we absorbed all of the sell orders here, consolidated and created an imbalance of buy orders, pushing that price up higher. And you can see we come back down and retested that zone. It's very clean and very textbook at the moment. We'll look for the breakout, retest, and push up higher. But at the end of the day, that doesn't have to happen. We can continue to fall back lower. So you do want to have some type of risk management, know your levels that you're paying attention to and what your risk tolerance is. Now, if you're enjoying the video, I do one-on-one coaching sessions, right? I've had a lot of people reach out to me for these one-on-one sessions, especially with things like Boyle, looking for some different option strategies that they have available to them. A lot of times people don't know, how you can leverage the shares that you own to give yourself a little bit of a hedge and the many different strategies that you guys can run. All right. So if you're ever interested in those, there's a Ko-Fi page, right? And there's a link in the description for that. You click on the commissions tab here. You can book a 30-minute or 1-hour session. I do those all the time. You can also request a YouTube video on the specific topic of your choice there, and also hit this little buy a coffee button if you ever feel like leaving basically a tip or donation for the free valuable content that I am putting out there for you guys. Now let's go to Boyle. And Boyle caught my eye. I almost went long Boyle here, but what I actually did was I shorted cold, and I did that because I'm playing options. And so, cold is at a higher price level. So the strike prices are going to move a little bit quicker as a percentage wise. So, I did go long natural gas here recently, and the reason that this was catching my eye is because this was a demand zone that Boyle had established, right? Boyle essentially has been trading in range ever since March, okay? And it's just been trading in this range, in this range, in this range. There's 3 stages to a reversal, right? You have your initial downtrend, right? And then you have this box consolidation period here, and then ultimately you have the reversal itself, which would be the uptrend. Now, we are very far away from getting the reversal, right? Merely all we did was we come back down and touched the lower end of the range. Okay. And we're starting to see some demand. We're starting to see some buyers. Boyle's got a gap up to fill right around 57 and also right around 67. Okay. So those are going to be some areas where we'll look to see if Boyle can maintain this bullishness, if natural gas can maintain bullishness, if Boyle can get a nice push up to those price targets up above. We'll just have to see. We need to be not worrisome, but cautious of a dead cat bounce, right? So let's say we do something like this, dead cat bounce, and then we come back down back to the lower end. Basically $45 is going to be the lower end of this range. If we end up flipping 45 to resistance from support, it's going to look really ugly for Boyle. So we need to see some continued momentum here. 71.96, let's just call it $72, is really that key level that we need to get above. Okay, we need to be able to flip this level to support from resistance. You can see that's also kind of aligning here with the 200 period moving average. And then ultimately, if we do that, then we have a greater chance of getting that 100% retracement up here to that $80 zone. Okay, which has been the top of our zone here. And then we would look for the same thing, right? We would look for a little bit of consolidation, a breakout, retest, and then a push higher, as we've explained with the supply and demand zones a few times in the video already. Now, cold, I've maintained the last video I talked about cold. $60 was basically the level, like below $60, we're bearish on cold. And you can see that this is the one that I was saying I actually went short on. So going short on cold is going long on energy. All right, this is gapping down this morning. Cold, similar to Boyle, has 2 gaps down to fill, one around 52 and one around 47. We'll see if we can get that continued momentum. UNG, all right, if you take a look at UNG, 642 is that big support level. We consolidated there a little bit, but we dipped down below it, and now we're starting to gap up here. There's a very close gap up to fill, just below 680 on UNG. We might try to fill that sometime very soon. Okay, but 667 is going to be your next overhead resistance level. Above there, we have 715, 731, and 777. And then we also have 821. Notice how UNG basically has the most gaps up to fill, right? Where we have one right here. We've already filled this gap. And then we have these two right here. So there's 3 gaps up to fill on UNG that are a little bit closer in relation than the things like boil and cold. That's it for today's video. Don't forget to sign up for that newsletter using the link in the description, completely free. Get those trade ideas to your inbox once or twice a week. All right. Or you can join the Investment Intelligence Discord and get access to all of the different charts and trade ideas that I'm looking at. Appreciate you watching. Smash the like button, subscribe for more.